Hello, Warriors. Dale Pinkert at TradeGATEHub.com. And we are powered by TradeView Markets, the broker where you could trade every instrument in your imagination with tight spreads. So I hope everyone had a decent day with the Fed. I believe that the preparation I gave everyone yesterday was the right calls. First of all, we talked about the yen, the potential of a yen turn. Because we had this divergence up here on the 4-hour right here. And even though the Fed did tighten, we had a pretty good break in US dollar yen. And in fact, if you look at it now, I know we have another day left, but looks like a reversal week. I've been, from the beginning of the week, I thought there was a shot for us to at least pull back towards this 130 level. Still a lot of momentum at the highs. We also got a nice little reversal in the dollar yesterday, and we're following through here as well. As you can see, we did diverge up here at this recent high. So I guess the jury's still out on whether or not this is it, or we just pull back towards 104 and then get one more blast to above 106, which I'm leaning in that direction. Also talked about there was too much bearishness in the bond market, and the bonds did have a good day yesterday, and they're giving it all back, just like the market's giving it all back. So we'll talk about markets that aren't giving it all back, and I'll give you a hint. The market that I've had the most conviction about on the long side is the same color as my hair. And no, it's not gray, it's silver. So here we have the 10-year yield after pulling back. Looks like it wants to blow one more time. But as you can see, we're not diverging. So that really, you would have expected a yen recovery with US dollar yen would be higher along with yields, but it's sharply lower. That's behavior we haven't seen in a long time. So I'm thinking that the yen is right, and we're close to a top in yields. Even if we pop above 350 next week, looks like most of this is already priced in with what the Fed did. All it did was get back to last week's highs. So, you know, all the panic about rates, I think as well can set up a nice buying opportunity. I would only do it with options, but the bonds as well, looks like we're not confirming this low. And with that occurring, it's a nice divergence, even though on a weekly basis, you know, it's still ugly. So starting to get some signs, perhaps we'll get some divergences here. Maybe we even turn it today, but I'm thinking next week. I've been talking about the solstice for an inflection point. The bonds, TLT calls are on my shopping list for next week. I want to talk about oil because, you know, I couldn't get anyone to give me any reason why oil would have topped. I've been talked about this top. So really, if you've been following our work here at TradeGATEHub, talked about getting out of your oil shares. So oil shares were making new highs. I had Garasalo on last Thursday. He brought his bearish case of crude to the table, along with shorts and Exxon. I know Mike's been working that side of the trade. And something else that, you know, we talked about here in our main chat room and on the videos was the top in natural gas. So natural gas is up a bit today, but, you know, again, could we be seeing the beginnings of some of this, at least energy part, even with all the ugly news about Russia cutting back, that perhaps demand destruction will be bigger than Russian threats, and perhaps China really can't reopen because now they're having COVID spread in Beijing. So, you know, there could be enough demand destruction to take it down. Plus, you know, President Biden's trying to strike a grand bargain with the Saudis. And the last thing on anyone's radar is $80 oil. Most are talking 150. But if we take out 94, it measures even deeper. I'm just talking about having something like this with a fib extension would take it to a breakdown under 94. So it looks like a long shot. I'm sure people are going to be buying breaks all the way down. I'm not. Let's talk about silver. And I pointed this out. We were here before the Fed, and we had a nice update going into the Fed. And then we had this little pullback after the Fed, and silver really held up great. I think we're on the verge of a important breakout over 21, let's call it 2180 closes, ought to do it above this high. So pretty constructive action in silver. See, because this is not the low, despite yields spiking, silver's been able to not make new lows. Gold also had a good day, and they had gold on the ropes. When I was with you last, we were doing this, okay? The day after this big reverse. This was Friday, this was Monday. I was with Mike Tuesday, but on Monday I said, yeah, it's got to hold 1810. Got down to 1807. 1807.60. So they had gold on the ropes, but to me, it looks like we're also putting in a higher low in gold. And, the next major area, of course, you have to take partials. This was a big day, up $30 yesterday after the Fed announcement. It accelerated. So you're wrong under 1800 now. You have to know where you're wrong, and you have to say the same thing in silver. I wouldn't want to stay long under this low, and that was 2082. So metals looking good. I still like them. I think that in 2022, silver could be good for me and could be good for you. And, it's one of my higher conviction trades of precious metals right now. I'm looking for eventually targets like $38 in silver, which is, it's not that aggressive when you think about what a lot of the hypesters are talking about, $200, $300, $500 silver. I don't know. 10,000 gold, I don't know. But if we start clearing this 1880 level, I don't see why we can't see new highs over the 2070 level, be breaking out. Eventually, I think we could get to 2,500, maybe by this fall. So those are some of the thoughts I had. Let's take a look at if there's any give back. I'd say the only negative yesterday was with gold flying. Gold flying, the shares didn't do much. They were actually they were weak, as a matter of fact. So here you have, gold shares looking, and that's really not that constructive for gold because this should be leading, not lagging. But I'm just, don't shoot the messenger. So there's a pretty good give back there. And silver's, it seems like silver, see how we have, like this is a gold stock that I'm long, and it's not looking that good, is it? So even with gold acting good, I have no explanation for it. The silver shares, they're just giving back what they got last week, but much better structure than the gold shares. Much better structure. These two. I'm not saying they're not going to, retest last week's lows, and it was, wasn't exactly a star performance, but you got to keep in mind that gold miners are still stocks, and with the market under pressure, even though you could be right about the commodity, the stocks could lag. I really think that if we're going to have a a nice move in the gold miners, what we need is a rally in the S&Ps. And we have a crash going on. You know, we negated yesterday, and now we're right at my line at 3680. I think we're, you know, into the panic part of this move in the market. And just interviewed a guy, Don Mead, who said the same. You know, there's not enough fear. You know, the VIX still hasn't broken out, has it? Let's take a look. You know, the VIX still, you know, way under 38. Really no fear. So the bears are saying that's the one thing that's missing. Mike Venezia has been saying that too, that we never got the volume and the kind of day, the big swoosh. We've had hard down days. We've had, you know, 97% down volume on the markets on days like that, but there still doesn't seem to be any fear. I mean, you almost have to think that the fact that the VIX hasn't traded 50 is bearish because it still has to do that. If that's a precondition to a low, I'm not sure it has to be. When I look at NASDAQ here, we are diverging off this low. I wouldn't be surprised. Let's see what happens, where the market is at. US markets, I believe, are closed Monday. So we'll see where things are at next week around the solstice. Maybe we'll complete something here. I'm not sure if we're going to have, yeah, you know, at new lows, we could have some divergence in the NASDAQ. Let's take a look at some of the individual issues since I'm there. Yeah, look at Freeport. So Freeport looks more like a gold chart, still acting weak. And here's the junk bonds. They're giving it, they haven't made new lows yet. They tried to rally. We need a turn in the bonds, I think, and interest rate pressures to come off for a lot of these things to be able to stabilize. I'll be looking at the bonds next week. So basically the best call of the week and the highest performing market, even though the shares aren't doing it, has been in silver. And we'll see if eventually the miners can catch a bigger bid, but definitely the physical looks great. And what kind of week are we going to have here? You know, we're putting in a higher low. Putting in a higher low, but not a great week, you know, I mean, still lower on the week. So we'll see. Dollar, let's see what happens around 104. This looks like we have two drives, okay? So here's one, here's two, so we get some type of, you know, 2-3 week or yeah, couple week pullback, and then one more blast to the upside. You know, now that we're here in the euro at 104.60, I know the week's shown a recovery, but we came so close to, you know, taking out this important double bottom here, you know, this level, this historical level here, that you would think that this time maybe they are going to go for the stops. So, you know, and get some type of massive washout. But as I pointed out, there are so many bears. I think there were 7% bulls in euro coming into yesterday and 7% bulls in stocks and 95% bulls in the dollar. So we did see some reversals there, but really, like, I think the stars of the market with the interest rate pressure that we're continuing to get, you know, we're still in wave 5 until it turns up. So, you know, TLT, this was wave 4 and we're still in 5. So, you know, gapping away, but starting to diverge, and sentiment on bonds also is like 93% bearish. Maybe I should express it in bearishness. So 90% bears in bonds. You can understand why, but I think that there's a contrarian trade setting up, and the messenger, besides some divergence next week, if we get to new highs one more time over 350, will not confirm. The RSI will not confirm. So that's something that I'll be watching next week as well. And I think that's pretty much a wrap. So I have a great guest next week. He's called 50 Pips, and it's very difficult to get him to, do anything in public besides run his own trading operation. But yeah, no name. His name's 50 Pips, and he'll be with us next Thursday. I'll ask him why he came up with that handle, not 500 pips. Why not think big? Anyway, most of all, if you survived this week, a lot of people are taking big hits. They're getting creamed in crypto. And, I could take a victory lap on this too, on crypto, because I remember many times with the RSI work that I teach and talking about that we had confirmed lows all the way back here in May, and then all we did was move sideways in a corrective pattern, that this wasn't going to be the low, because markets rarely bottom when price and momentum are confirming. And you know what? We're not diverging here either. We're actually confirming at a second low. It's really weak. So I know a lot of people have been waiting for the big round number of 20,000 to buy it, but I would think that if everyone wants to get long at 20,000, it either doesn't get there or just slices through it like a hot knife in butter. So this actually looks to be one of the weakest asset classes on the board. Oh, I hope that everyone, okay, Mike is doing some trading in here on this down day and putting some equity to work. Mike will be with you guys tomorrow at 11 a.m. Eastern. I hope that we're adding value to what you're trying to accomplish in a difficult task, being a trader. It's not easy. In fact, it's probably one of the toughest things out there, because it's very much psychological warfare between you and that mean Mr. Market guy. So above all, remember, money comes and goes, time is gone forever, make it count. This is Dale Pinkert signing off on Thursday, the day after the big Fed battle. We're getting great trading opportunities. It may not be the best kind of position market because things aren't following through for more than a day. But again, that's why you have to ring the register. And if you need to learn to do it, play Pink Floyd's song Money, and you'll hear the register ringing, and that'll remind you when you're up 25 bucks on gold that maybe I should take a piece off and put it in the bank. So have a great week ahead. I'll probably be here. Monday. I believe all markets are closed in the U.S. and but we're global. So I'll see you guys. I'll be tuning into Mike tomorrow. Good hunting the rest of the day. And I think the case is continuing to build for silver and gold. All we need is some confirmation from the miners. And that's a wrap. Thanks for your attention. If you like these videos, click the like button and subscribe and spread the word. We're here just sharing the word. We're not soliciting you to sign up for a newsletter or a timing service or a trade recommendation service. At the most, you could check out TradeView Markets. You're trading anyway. And, you only know if you have one good racehorse, a good racehorse, ask Mike, You don't know till you run it against another one. So check out TradeView Markets, and I'll see everyone later. Adios.